she was on, no? Or she wasn't?
No, she wasn't yet.
Oh. All right.
We'll see.
So we're live now. Martin, I think you can kick it off.
Okay. Hello, everyone. Very welcome to our webinar, Meet the Blockchain VC. It has been a few months since we, the CVA, Crypto Valley Association, had our last event. It was at the beginning of the year. The landscape changed a lot, so we'll discuss now at this meeting not only about about investments, but also about the general state of crypto. And I'm very happy to have Demelza with us, head of research at Cointelegraph and part of the investor working group of CVA, and our guests, Dan Tapiero from 10T and Jack Cormac, excuse me, from Chiron, and also Alice from Stillmark. Very happy that you have all made it and that you're in with us. And I'm looking very much forward to insightful discussion. And maybe I would like to give the three of you, Dan, Jake, Alice, a quick the opportunity to present what you are doing, and then we'll start with our questions. Welcome, everyone. Maybe Dan, you want to start?
Thank you for having us.
Sure. Hi, yes, I'm co-founder, CIO, managing partner of 10T. We are a growth equity, private equity fund that only focuses on crypto blockchain businesses that are, you know, a bit larger, usually revenues more than 50 million. So we're not venture, don't do early stage. It's usually B and later. The fund, we have 3 funds, 1.2 billion AUM. We've invested in 20 companies in the space. You can go to our website and see what they are. I put them out there. And as far as I know, we're still the only fund out there that does this exclusively. So I said to you beforehand, I'm not really a VC. We don't take, as far as I can see, we don't take that kind of early stage risk. We don't really take business risk. We're investing in businesses that are already, quite profitable. So anyway, that's us. I come from, just 1 second, of the traditional world. I spent 25 years in the macro hedge fund business, and have moved my way over here into the new world a few years ago. So.
Thank you. Jake or Alice, please. Just go on, Jake or Alice. I think we don't have to, we just start to talk. I don't have always to address you, just however you feel.
All right, I'm Elise Colleen. I'm the managing partner of Stillmark, which is an early stage venture capital fund focused on companies building in the Bitcoin ecosystem. And so what that means for us is that we are looking at companies that are advancing BTC as an asset or financializing Bitcoin. We're looking at companies building second layer technologies on top of Bitcoin, or third layers, or integrating those. And then we're looking at mining companies. My background prior is in venture capital, working in enterprise tech and infrastructure investing largely. And in addition to this, I'm on the board of directors at Blockstream.
Great. Hi guys, I'm Jake Cormac, and it's a pleasure to be here. I'm the founding partner of Chiron Group. We're based in Hong Kong, And at our core, a conglomerate responsible for 10 portfolio companies covering all the major verticals from media to infrastructure to technology. Our other side of the business, we are classified as a single family office, and we make various investments across different stages, either in the US private consumer technology space or in the crypto space. We tend to partner with layer ones, and we help them grow through our resources and invest in the projects and applications that build in those layer ones. Based in Hong Kong, and we are growing. So, and it's a pleasure to be here, and looking forward to kicking this off.
Thank you very much. My question now, just to start with, what do you think about the recent events, maybe also FTX, and what does it have an impact on refining your investment and also diligence process?
All right, I can start. So there was a few things that happened to set up FTX as a hub of chaos in the crypto ecosystem for 2022. So I think the failures can be divided into a couple categories, which are just simple things that went wrong and can go wrong in venture capital investing or in company building. And then on the other hand, we had some sort of extraordinary activities that were happening at FTX and Alameda, made possible by crypto, of course, and by the use of obfuscation and the complexity of their business to the advantage of FTX, so that regulators and others had a hard time understanding what was going on. So from Stillmark's perspective, we're fortunate to have been able to avoid exposure to FTX, and it seems as though exposure to companies that were immediately impacted by this. And that's twofold. There's two reasons for that. First, we're focused on Bitcoin, and Bitcoin tends to be maligned as the boring ecosystem within the broader crypto field. But of course, there's a benefit of boring, which is that the fundamental bricks are just being laid for what will become this broader world we imagine of digital payments, and Bitcoin is a store of value. And so that tends to be impervious to some of the chaotic things that can happen in crypto. And then on the other hand, we're also very focused on our process of diligence and the application of a really traditional venture capital practice to this new field of Bitcoin. And so some of the things that happened here in terms of, things that were overlooked for FTX, or that perhaps were not discovered until it was too late, those were things that I hope that we would have caught just by taking a standard venture capital approach to evaluating the business.
Well, I mean, I'm just going to chime in here. I mean, for me, FTX is just a garden variety fraud. I was talking about that before the call. I come from, the old world, and this is just typical. A young trader loses money on a trade and then covers it up and takes money from clients, which is a very clear line. So I understand a lot of people, and especially the traditional press, I mean, they've all sort of become apologists. I hope that changes. We don't really need people like this at all in the space or connected to Bitcoin, blockchain, crypto, however you want to describe it. So to me, it's pretty clear, cut and dry.
I mean, my view is,
go ahead.
Sorry, please. Yeah, my view is you've got a classic case of lack of corporate governance and procedures, married with rehypothecating client assets and borrowing against them, and then sort of creating this whole ecosystem. And now we're seeing the contagion of that. So I think my view is exchanges should never really be custodians or hold client money. They should be intermediaries, simply put. And I think in order to get the valuations that FTX sort of reached, I think it raised its last valuation was what, 32 billion. One of the valuation metrics that was based on was how many users were on the platform. So I think FTX were enticing retail users with products and an easy to use interface, high yielding products as well, may I add. And I think that's sort of the core of the problem here. So that's my view.
I would just like to also say, for the record, we have not really, our companies have not really been hurt. I mean, obviously FTX was taking revenue away from some of the exchanges that we own last year. You know, Jake just mentioned enticing retail, et cetera, and pulling people away from, I think, stable, you know, proper exchanges. So I suspect that going forward, we're going to see quite a significant increase in revenue in some of those exchanges. I mean, I can just, you know, crack in Huobi, et cetera. It was very clear last year that FTX had been pulling revenue away. So some of the early signs that at least allowed us to pass on those fundraisers of FTX were the same signs, you know, that, as Jake mentioned, sort of are traditional private equity signs that are typical red flags, you know, not being able to explain the source of your profits. I mean, he was talking about his wealth being generated from cross-exchange arbitrage, buying one Bitcoin on one exchange, selling on another. I mean, if you've been in the investment business for any period of time, you know, you realize that that's not rocket science. No one builds tremendous wealth that way. There's no investment process. There's no framework. You know, it reminded me when he said that of a split strike arbitrage, which is what Madoff said was his investment style or investment focus. I never could understand what that was back then. And so in the same way that you have these things that don't quite add up, plus all the signs of, you know, the sponsorships, all those obvious signs, thankfully we passed on that. But I mean, I really think I just reiterate, should move on and let us all continue, as they're saying now, this big building and focusing on growing.
Dan, I have a question actually. So Dan, quick, did you, when you guys had a look at FTX, you mentioned you looked at it a couple of times. Was there a data room when you sort of assess the balance sheet?
There was, but
curious to know what it looked like.
Yeah, I mean, we've looked at, you know, probably over 100 data rooms, and, you know, we even rank the quality of the data rooms we look at. And there is a correlation, as you would suspect, that the companies that are completely open, that, you know, share everything, that don't mind having an external auditor come in and check numbers, just like there's a company we're investing in now that's that way. No, they were hesitant. They were slow in getting us things. You know, we actually stopped our diligence, you know, relatively early in the process, just because I thought that the valuation, which was 30 to 40 times revenue, was just exorbitant. And we tend to not invest in things that are, let's just say, over 10 to 12 times revenue, at least last year. And so for us, that's a very clear sign of excess and greed. You know, we passed on many different companies that wanted those type of valuations. And I just say that because the companies that are looking for long-term partners that have a long-term view, they're not there to show their, you know, their buddies that they can get a high valuation and then, you know, as he did, pull money off the table, which is a big, you know, another type of red flag that, you know, he pulled a chunk of those raises off for himself. I don't know how those investors allowed that, but, you know, the type of founder who you want to partner with is not reaching for the moon day one, right? Cares about a long-term partnership with his investors and wants them to make money. Coming in at a $32 billion valuation at 30 to 40 times revenue, I mean, we're trying to make a 10x. I know the venture people are trying to make 50 or 100x, but we're just trying to make a 5 to 10x. And, you know, to think that that could be a $320 billion company in the next 5 to 10 years was a bit of a reach for me. So we actually stopped early. But of course, there were hurdles to getting, you know, numbers, et cetera, and they wanted us to sign all sorts of things. And then at the end, they came back and said, well, we could do you a favor and we could give you a $5 million piece. And our average ticket size is 40 to 50 million. Like $5 million, we don't do anything even under 15 or 20, really. So it was like when someone comes back and says they're going to do you a favor, and they know what our ticket size is as well, it just, it just was like, no, thank you, please, guys. And 30-year-old, I remember what my skill set was when I was 30. I was pretty good, but to think that I was going to invest on those metrics with someone that age who wasn't really a proper CEO or entrepreneur or trader, portfolio manager, anyway, so there were a lot of signs. I hope that answered the question.
So discipline,
without
experience,
maybe
I
will
guts.
come in with one more question so that we can move on. We have all together maybe 1 hour. I would ask one question and then hand over to Demelza. Now, I mean, we saw the last few weeks that, of course, this FTX had quite an impact on the whole market. Valuations dropped again versus the equity market, which was becoming a bit stronger again the last few weeks. So my question here, what do you think? And now not only related to FTX, but general, the market, what do you think? How long will the bear market last? Of course, we all can't give clear predictions, but just what's your gut feeling?
Elise, you're going to go ahead?
So Bitcoin tends to lead us out of bear markets. So I guess I'll speak on behalf of Bitcoin. We don't know. It's a good point, Martin, to mention that we don't know what will happen in terms of the price of Bitcoin or other cryptocurrencies. And in fact, Bitcoin's exchange rate tends to do exactly whatever it is you would like it not to do. That said, what we know historically is that what's pulled us out of bear markets has been Bitcoin's halving event, which is the block reward for Bitcoin miners getting cut in half. But there's a couple other things that are positively correlated with Bitcoin's price and fundamental value. And those are marching ahead. So let me mention that. We know from a historical perspective that adoption and the number of people holding Bitcoin is correlated with Bitcoin's price. And the expansion of the utility set is related to adoption and thus the price. Those things are progressing at a very quick clip. And we also have tailwinds of some really interesting innovations in the Bitcoin space, things like Taro, which allows you to get stable coins transacting peer-to-peer instantly and nearly for free on Bitcoin's Lightning Network. And if we imagine that that's the type of utility that can really drive adoption of the use of these protocols, then we can start to see the light at the end of the tunnel in terms of the bear market. And so I think there's a lot to be optimistic about. And then my final note here is just to acknowledge the work that founders do in bear markets and how that sets us up to really take advantage of the quiet space. Dan made a really interesting point on FTX earlier that I'll circle back to because it's related to this theme too. He talked about the benefit, one of the benefits of FTX collapsing is that healthier and more mature exchanges, those that are run by true professionals and not fraudsters, are going to see this tick up in activity and in revenue. And that's not just true for exchanges. In fact, what we saw after FTX collapsed was a peak, a spike in people purchasing hardware devices to help them buy their own Bitcoin. And so that's indicative of a maturation of the market, of people holding Bitcoin and people otherwise engaging with these technologies. And so we saw that happen. And we also saw exchanges come out and talk about proof of reserve, which is a tool really for exchanges to be able to open communication with their user base and provide transparency that retail investors and institutions are demanding. And so those are some of the themes that founders are building against in the current bear market that I think will put us in a really lovely position to see a significant uptick in adoption as the price starts to rise.
before I let Jake talk, I just want to confirm that, we're a significant investor in Ledger. And I think in the first week or the second week of November, Ledger had a record week. And I think they might be having a record month as well. So I'm just, confirming that point. People are moving off exchange. And I think we all saw, was it Jesse Powell of Kraken, who said, listen, I want you to take your coins off exchange. Please put them into cold storage. I mean, I don't think we've heard that from any of the exchange CEOs. So it's just, there are good actors in the space. There are people who care about it, who care about, long-term adoption. And so, I don't know, that's just in stark contrast to, what we've been living through with FTX. But go ahead, Jake. I didn't.
No, I mean, just on that Ledger point, one of our portfolio companies is Changely, and Changely facilitates all the swaps between all the self-custody wallets. Yeah. And where we've seen a huge uptick of activity of people moving, retail moving their assets off exchange onto cold storage and self-custody. So there's that awareness. Alongside with FTX collapsing, we're seeing a purge of whales that would use, say, FTX as a venue to manipulate prices as well. So we're seeing that being purged. So I think with all of that, I expect to see somewhat of a reset, hopefully Q1, Q2, but who knows?
Well, I'm going to take a stab at who knows, because I was in the who knows business for 25 years and still am a little bit. I mean, I think Elise made a great point, Bitcoin by the end of 24, I would bet with a high degree of certainty, it is going to be at a higher price than it is today. Yes, we have had, rallies post halvings or into halvings. And Bitcoin as a mature asset now does seem to trade with TradFi liquidity cycles a little more than maybe it did 5, 6, 7 years ago. I think, look, for me, at least, Bitcoin is, pure collateral. It's the highest collateral. There's nothing like a Bitcoin, I hate to call it digital gold because it's its own thing. It's bigger than gold. Even though I'm a gold advocate, I think it's much more complex, has many more use cases. And is at the core of this whole, what I call digital asset ecosystem. Unlike other people in the space who are Bitcoiners, I do think there is room for other chains. Ethereum, I think, is also something that's proven itself over the last 7 years. Huge number of use cases there. I am not a Bitcoiner who thinks Ethereum is fraud because of the pre-mine and all of that. Bitcoiners tend to get a little too hung up, I think, on everybody else, and they should just be focusing on building the Bitcoin ecosystem like Elise is. And I'm very bullish on Lightning. I think that's a fantastic new layer too. But the reality is that I don't think, and I can say this, I think, with certainty, there aren't many things you can say with certainty, but I don't think any of us really know what shape this world will take 3, 4, 5 years from now. Just as an example, I think 2 to 3 years ago, no one would have expected, let's say, the NFT universe to grow as it has, or the stablecoin universe to grow as it has. And so there are lots of things going on in the space that aren't Bitcoin, but that I think reinforce the value of Bitcoin over the long term. And Bitcoiners might say, well, if all that capital just came into Bitcoin, we wouldn't have to worry about potential hacks and frauds and some of these other lesser chains. I think that's part of growing and developing and maturing. And if it ends up that one day in the future, everything is just Bitcoin, that's great. And if it's a multi-chain world where there are different use cases where you don't need the security functionality, the apparatus around Bitcoin, because for me, that's what's important about Bitcoin, is that it's bulletproof, that it's a security apparatus. You can be sure if you have your Bitcoin on your ledger, no one's going to take it from you. And these other chains, in blockchain gaming, as I said, in some of these other areas, you don't really need that functionality. Let's save that argument for another day. The space is still growing. Some of those metrics that we look at have hit all-time highs recently, including the number of holders of Bitcoin, but even things like developers, the number of developers has just hit an all-time high that's in the space overall. The number of dApps that they've written also an all-time high just recently. So there's underlying growth in the space. And in terms of price, I think Q1, Q1 is the low. And I think there's a chance that we already have made the low in Bitcoin and Ethereum. I think we've made the low in the 10-year yield. I've been saying for the last 6 months on Twitter that the Fed is over-tightened. And I think some of the data in the last month have just proved that right. The Chicago ISM number came out yesterday at 37. There's never been a time when the Chicago ISM was at 37 that we weren't in a full-fledged recession. So I think growth and inflation, and I've got 100 other leading indicators that suggest that too, and I posted them on Twitter. I think, with a high degree of probability that growth and inflation are going to be lower next year. And that will be positive for liquidity, which I think will be positive for Bitcoin and Ethereum, even if actual growth slows down, activity slows down. I still think that the interest rates that we have now are absurd, and the inversion in the yield curve, the 10-year at 360 and the 2-year at 440, is the market telling you that the Fed is over tightened. So I see gradually next year, maybe we're along, we bump along the bottom for a little while. Maybe we're 15 to 25,000, along the bottom. But we are very active at this moment and buying, adding to our portfolio. And we're seeing discounts now, which we're very happy about. I know I went on a little bit there, but there is a macro component to all of this now that I think affect Bitcoin and Ethereum. Everything else outside of Bitcoin and Ethereum to me are venture projects. I'm not discounting them, but they're just, to me, they're different instruments. So I think if you're interested in the space and you're watching this, now's the time to really get involved.
Definitely. Yeah. I mean, looking back at the last kind of decade of Bitcoin, in 2013, the price was starting to go up. It kind of like peaked out at 2014 around I want to say it was around $1,000 or so. And it took 3 years until 2017 to get back to that point. And then again, in 2017, we hit 20K, and it took another 3 years to get back to that point. And so, if we look at 2021, December as kind of this peak, and if we take it 3 years out from that, we're 2024 December. So maybe the end of 2024, we're looking at going past the last all-time high. And as Elise mentioned, with the halving coming up in spring 2024, that all kind of fits in very well with the historical price movements, although it might not exactly determine the future. I think also your points about the macroeconomy, Dan, are completely spot on. Somebody from Europe asked me how Black Friday was in America, because basically Europe's having a really bad economic situation, but America, even though rates are so high, it was the lines for Black Friday were just just ridiculous. And so that was negative, because that might signal to the Fed they can keep raising rates, and then the markets, responding to good news, we're not as bad off as they thought we were, but then that's a negative for the market, because then that means, they're going to raise rates again. So I think, yeah, you have a great point. I'm definitely buying now. I think that this is a fantastic opportunity to stack sats and get involved in the market again. One thing is talking about the use cases. You hit on a couple different use cases, Dan. I recently, there was a whole discussion about Bitcoin being a store of value, Bitcoin being a global medium of exchange. Some people for a long time were talking about Bitcoin replacing the dollar. And, then we kind of saw, well, stable coins, actually, might be a better use case to replace the dollar. And Elise, you mentioned Taro and stable coins being built on top of Bitcoin, which I think is fascinating. in a recent podcast with Peter McCormack, you know, Greg Foss and James Lavish talked about actually Bitcoin replacing treasuries and basically saving the dollar as the global reserve currency only by having Bitcoin replace global treasuries as, you know, a reserve asset. So I wanted to ask each of you what, you know, for people that are coming into the space and think that there's no use here, there's no utility. What is the utility of Bitcoin? What is the use case here? What are the top use cases that you think are going to materialize in the medium term?
Elise, you're Ms.
Sure, I can start. So when we talk about utility, I think it's important to not combine or confuse the activity happening with Bitcoin and other cryptocurrencies, including and especially Ethereum. These are very different things. So when we look at what's happening in terms of traction with a cryptocurrency or on a protocol, and this includes Bitcoin, what we're really looking for is stable activities. So things that are not fad driven, but that are going to be sustained through the duration. So we're talking about not just one bull market cycle, but several. And hopefully we're seeing utility that's also extendable. So let me give you an example of something that has driven a lot of the traction on Ethereum and other protocols, just straight up gambling. Extreme speculation on long tail of tokens and on NFTs. And I think there's a great application of NFTs somewhere, but that was not the traction that we saw emerge in this last bull market, to be very clear. So going back to Bitcoin's utility, Dan talked about Bitcoin as being a secure and unchanging protocol. And he didn't say this, but I think he probably meant to imply that one of the things that creates the security is the fixed nature of its rule set. And the importance of this was referenced in the premise of the question. When we have a monetary system that is sort of very dynamic around the rules for participation and what we can expect from the institutions at the helm, that's problematic and creates a lot of risk for people and a lack of control. Bitcoin is meant to provide the opposite. It's a technically secure protocol, but its policies are also secure and they're fixed. It's very different from Ethereum and other protocols, but especially Ethereum. So let's talk about what you can do when you have a protocol that's secure and its policies are fixed. You can use its native token, Bitcoin, as a store of value or as a way to exit the system that you're otherwise in. And so while it might not yet be a hedge, against the macro environment or a replacement of the dollar, it's a way to opt out and to do something different and to have your value stored within a secure technology, but also a different rule set. But we're actually seeing adoption of Bitcoin more broadly than that. So we're absolutely seeing Bitcoin used for payments in emerging markets. We're seeing Bitcoin used for payments between markets. So I'm talking about areas where it's common to send a family member abroad to work, and that family member will remain an important part of that family's finances. Bitcoin's used for that as well. It can also be used for some of the funner or flashier activities like gaming that are often referenced for other protocols. But I want to pause there just for a second, because in fact, one of the things that folks in the gaming space want is to know that when they're sending a transaction that is going to behave exactly the way they expect it to behave. So these are really sort of simple things. They definitely become more important when large value exists. So it's more important in a transaction for your house or your car for the payment to be assured and secure. But for that not to happen is still an annoyance, even when the transaction is small or meant for an activity like gaming. And so adoption in the Bitcoin space has been really broad, driven by these couple of things, which is the security of the technology and the security of the policies that exist around Bitcoin.
Jake, you want to?
If I may, I believe Bitcoin has some legacy limitations around the 10-minute blocks, and there's sort of question around how do we scale Bitcoin. So I know for the users out there that aren't familiar with Bitcoin, there's been some forks that people tend to get confused. There's the Bitcoin Cash fork and then the Bitcoin SV. I was curious from what your views on these sort of forks are and the sort of layer twos that support Bitcoin to facilitate these faster transactions and sort of to, try and compress the costs.
There's great news here. So Lightning has matured. Also in 2021, we got this sort of stress test of Lightning in El Salvador's Bitcoin airdrop that was, of course, executed at the same time as Bitcoin was made legal tender in El Salvador. We saw this spike, of course, in activity because people were spending this $30 of Bitcoin that they had been airdropped. And all of that economic activity was happening on top of Lightning Network, actually primarily on LND, which is Lightning Labs' implementation of the Lightning Network. And so we really got to stress test the system. And the great news is that Lightning Network performed extraordinarily well. And the better news than that is that the feedback that was used from that in-market test, and others were happening concurrently in emerging markets in other geographies, but the feedback from that test, the metrics that were gained, informed Taro, actually. So what we saw with the airdrop activity was that people were spending their Bitcoin, right? You know how they spent it? They went to the grocery store. They took their family to dinner. The Pizza Hut was a big beneficiary in El Salvador. They went to the pharmacy and picked up meds for their kids. And so, and I think another motivation of the spending was that the families that needed this money to pick up medication for their kids at the pharmacy could not tolerate the volatility that BTC currently has. So if you're making $400 a month, and you're spending $400 a month, BTC's fluctuations are not something that you have an appetite or an ability even to tolerate. And so with that insight, Lightning Labs went back, they put their heads down and went to work and developed Taro, so that the families in El Salvador, other emerging markets that don't have a debit or credit card, but want to more frictionlessly interact with their local brick and mortars, or folks across the globe, but can't tolerate Bitcoin's volatility, Taro is meant to give you an ability to do just that. So it's not just Lightning Network, though, that scales Bitcoin. And I'll make a really quick mention here of sidechains like Liquid Network. And by the way, this is relevant to FTX. So Blockstream advances a sidechain called Liquid Network. That essentially can allow you to apply a new rule set to your Bitcoin that's defined by a set of stakeholders that are either familiar or unfamiliar with one another. It really doesn't matter. But if it had been applied to FTX, there could have perhaps been some better policies or transparency around policies put in place, including for inter-exchange activity, and also exchange happening between Alameda and FTX. So I'll leave it there, but the good news is, Jake, that Bitcoin is rapidly scaling through these second and third layer protocols, and we're really starting to see the benefit of that in terms of adoption and expansion of utility set.
No, thank you for that update. That's exciting and fantastic to hear. I'm just curious, how were they able to integrate Bitcoin payments into the sort of the merchant and retailer network? Was it through points of sales? Were they able to use their wallets to interact?
Yes.
And who was
we invested here
for developing that?
We invested here, actually. That's such a good question. So the short story is that merchants need access to infrastructure in order for them to accept and send payments on Lightning Network. And what we saw in El Salvador was actually local talent emerge to address that problem set and pain point for merchants that needed to adopt Lightning Network in El Salvador, right? And it was a group called Ibex Mercado. So Ibex Mercado comes from Guatemala, the neighboring region, and was able to bring groups like Pizza Hut, Starbucks, pharmacies, grocery stores, etc., banks online, but providing Lightning Network infrastructure for them, and then a smooth interface so that when you were paying in Bitcoin, you had a similar experience, but maybe even a quicker experience as you would have had if you paid with a debit or credit card. And so it's not much different from merchants adopting any sort of new POS system. But of course, merchants don't like to do that. So the challenge for Bitcoin, for Lightning Network POS systems that offer this integration with Lightning is to make it smooth, not just from a purchaser's perspective, but also from the merchant's perspective as well.
So I'm going to chime in here a little bit. I mean, I think the audience should know there are a lot of different sort of philosophical viewpoints as to how the future is going to develop, and people move along the lines where they have the greatest conviction. And of course, there's a Bitcoin only crowd. There's a crowd that thinks about everything. There's people who think that there's a hierarchy of cryptocurrencies. Some people think there should only be one. I would just say my sense on this is that, you know, human nature is what it is. And, you know, I think there's always going to be more than just one hamburger place. You know, there isn't just going to be McDonald's. Like even if McDonald's makes the single best burger of all time, humans are not going to just go to McDonald's. There's going to be a Burger King. There are going to be all kinds of burgers. People are going to make burgers at home. And I'm not saying that that's the best or most effective way forward, but that is human nature. And so I'm really not willing to bet sort of against that changing. And I think there is a little more uncertainty out there, and humans like to tinker, even to their detriment, right? So, you know, I sort of have that view. On the other hand, if we talk about the dollar, again, coming from my background, I don't think it's really productive to talk about Bitcoin replacing the dollar. Is it theoretically possible? I mean, I guess so, but, you know, it's like a bit of pie in the sky. And from from where we are today to replacing the dollar is, you know, miles and miles to go before we sleep. So I don't see that it's productive. I think, again, that's more philosophical. And having studied philosophy and history in school, and, you know, I get it. I like that. But my business, really, we're in the business of making return for our investors and also helping the overall ecosystem grow in whatever way that it may grow. And so I think Taro is fantastic. Lightning Labs is doing a great job. I mean, I think the things that Elise has mentioned are fantastic, and especially in the emerging world where they don't have developed monetary systems. And she mentioned El Salvador, but there are plenty of other emerging countries that don't have a proper monetary policy at all, or a currency policy. For them, I think it makes a lot of sense. But again, it's very early days there. I mean, I would support that. I mean, I do support that. But I just think it's pretty complex, just because we're still early in the development of all cryptocurrency, and even for Bitcoin itself. Right? It's been 10, 12 years, but it's still relatively early. And so you have people experimenting, and it's supposed to be that way. You're not supposed to stifle experimentation. Let those people fail, right? If Bitcoin is going to be the only one true God, then let the other ones fail, and that's fine. That's what free markets are for. And I step back and I say, look, the old world, the TradFi world, is littered with all of these interventionists. If there's one thing I'm sure that all people in the space can agree is that, you know, we're all for free markets, and, you know, we have these failures. There's no government coming in to save FTX. There's no government coming in to save Luna. It's all good stuff. And so, you know, let the victor you know, prove himself or herself. And, you know, I think that's a great natural process. And shooting for replacing the dollar, I guess, is I think a goal, but, you know, to me, it's sort of pointless. And I prefer actually to stay a bit under the radar and not get all of these uninformed officials all worried that, you know, their currency is going to be replaced. So I hope that answered the dollar question. It's a bridge too far, and I don't know why they're trying to cross it, is kind of the point. And there are a lot of other currencies that will be worthless before the dollar, like 175 other ones, right? So what are you doing? Why bother, right? Let's start with El Salvador, and we can move to, you know, other places, the South Pacific, and, you know, let it prove itself.
Maybe if I would like now to change a bit our discussion. I think we talked about FTX, its impact now, Bitcoin, its opportunities now, especially coming back to FTX. I mean, lots of discussion now starting again about regulating our space. And I think it's, so my question here to you is, how do you see, or what do you think is needed on the regulatory front? What do you see coming?
If I may, just away from the centralized exchanges, more into the self-custody and self-custody world, we're seeing increased activity into KYT, know your transaction. And I think KYT is extremely important for organizations to monitor wallets, ensuring that they're not transacting and confirming wallets associated and connected to illicit activities. And if there was increased regulation or reporting around this KYT process, I think that would discourage malicious operators from transacting in this space. So from my standpoint, I'm in favor of KYT. I think it's very important. And additionally, KYC as well. KYC is extremely fragmented, and to bring to enable mass adoption, you need mass users in retail, and in order for them to spend their fiat into crypto, they need to pass KYC. So I think having some form of digital passport or some form of unified process will, one, satisfy the regulators, and two, enable that seamless adoption of mass users. So those two combined, I think, could be very empowering from a regulatory standpoint. And of course, cleaning up the centralized exchanges. There's a lot of work to be done. My view still stands. I don't think they should be holding customer assets. I think there should be a custody that interacts with an exchange and they transact. That not only protects the consumers and the customers, but it also will, in my opinion, satisfy a lot of regulators.
Well, okay. I mean, I'll go. I think that, look, I'm not sure that this world, at least now, can be regulated. Remember this, 90% of total world cryptocurrency volume is done outside of the US. So the US can come out with its regulation, even if it's friendly regulation, that's for US people. It's not for the rest of the world. I don't think Europe is going to just fall into line and use US regulations, or any of the other countries. And again, we were just talking about the importance of Bitcoin for emerging countries. They also will have their own rules. People don't like being told what to do. So I think part of the reason that we don't have a clear response to the FTX debacle is that it's, does it come under Bahamas? Does it come under US? There aren't proper rules there. There's no one, there's no one to, to execute or to kick off a process, at least at this stage. I mean, Madoff was in the US. He went to jail right away. So I think that's sort of the reason why we're in this nebulous area. We do need regulation, but it's got to be thoughtful. And if the US overdoes it, I think it could stifle, development and innovation in the space in the US. And that's just going to be a very bad idea. So I think the real challenge is to get policymakers to understand exactly what is Bitcoin, what is a blockchain, how does it work? What is this world about? And, the engineering of it, the math behind it, the cryptography, this is not easy stuff. So for us to just say, okay, we need regulation, I just think we're still far away from getting a strong enough group of policy people, US or anywhere, to be able to understand exactly what they should be regulating. So we can talk about it, but I think it's also dangerous just to have some neophyte come in and say, oh, this is bad and you can't do this, right? It's got to be a lot more thoughtful than that. And I think we're far away still.
And it's not just what we should be regulating, but it's also who the regulators should be listening to and trusting, and what sort of questions they should be asking and research they should be doing. And to bring this full circle, one of the other benefits of FTX unwinding, I think, is that it holds dollars and influence on regulation away from the hands of someone that had malintent. So as an example of what SBF and FTX were lobbying for, or lobbying against, I should say, it was some of the true value of the ecosystem. Sam was spending time lobbying against proof of work, as an example. And he had the ear of regulators. And I think that his brand has fallen, or at least been significantly impaired, will hopefully allow regulators to start to demand more of themselves in terms of how they understand the tech. And that would be perhaps one of the best outcomes of the FTX debacle. One of the areas that I would suggest regulators pay attention to if they want to take action is a subject we already talked about, which is proof of reserve. I'm not sure there's a good reason for exchanges or other custodians to not provide a proof of reserve practice. And so that's sort of a way for regulators to engage, to start to learn about the tech that exists in the space, to create transparency and better relationships between custodians and retail users or institutions, and to become active. And we're hopeful that they'll do this in a thoughtful way.
On the proof of reserves, I was speaking to a custodian in Switzerland recently about this. And when I asked kind of why they don't have proof of reserves, they told me that it can be a target if you start to, make it public what kind of, reserves you have. Also, I think we saw, was it Jesse Powell at Kraken that said we still don't have proof of liabilities if they're, if the other side's not audited by a third party auditor. But I think also, Jesse Powell at Kraken, he made a point that part of this whole FTX thing is because the US wouldn't allow companies within the US to offer these attractive products that people wanted, like these yield products. And so people were leaving, for an exchange to offer them. So people were leaving and moving their assets off to less regulated areas, or areas where the US couldn't execute, make them follow their laws easily. So, I think that it's very tricky, because also if we start to my opinion is that if we start to really allow hard regulation here, it's going to go more and more towards the same financial system we have now. And so I've been in crypto for about a decade, actually now, 9 years. And I'm from the original group of people that really are, allergic to this type of stuff. So it's hard for me to see, now this backlash. I think it's going to have a lot of, regulators are going to say this is a reason we should regulate, and try to, use this as an excuse to be overhanded now. But
but again, it's which regulators in which countries, and are they ever going to have a coordinated approach? This is the most decentralized sort of, concept of value that has ever existed. So I just don't see how they regulate, in a consistent way. And what you have is, like with China, they 2 years ago, or was it at the beginning of last year, they kicked out all the miners. They banned Bitcoin again for the 7th time. It actually seemed to work this time. But look, the system continued to thrive and grow. So there is a scenario where even if you have very intense regulation from one country or another, the network will just morph. And, as it morphed after China's, actions. So I don't, I'm not even sure what that will do. Anyway, so that would be maybe consistent with some of your hopes as well, right?
Well, I guess a counter argument is Coinbase. They're listed and they report their assets and their balance sheet to the public. So there could be some reporting stripped from that, which exchanges could follow. It's just an idea.
Yeah, I think when the companies, so we have all of these private companies in the portfolio, and they do need some work. They need help in becoming what I call more buttoned up. And if they want to tap into, again, I know this is a little bit of a different philosophy because even equity, the concept of equity is a legacy world concept. But if they do want to become public and they want people to, participate in their ownership of their businesses, they do have to go through a pretty stringent, due diligence process before that happens. So, I think there is something to be said for that. My view has always been that the two worlds are going to, in 5, 10, 15 years from now, come together. That the digital asset world is building up on its own here. This is the legacy world, and they're going to come together at some point, somewhere. I don't think you just, wholesale remove the entire or get rid of the entire existing banking system, certainly not overnight. And I think people in that banking world are beginning to see that there is tremendous value here. And also corporations. I think now you have 300 or so, I saw a list of corporations that actually have incorporated some sort of blockchain into their business model, and they're actually using it. We can, discuss whether is it the best blockchain or not, but the idea that their minds have opened up and are actually incorporating them just sort of tells me that we are sort of going into this, morphed world.
Maybe. I think we are not yet at the end, but we enter now in the last 15 minutes. And I think we had a vast discussion, a very broad discussion about different topics. And I want to come back a bit to the VC market and have the double-fold question. One, is the blockchain market oversaturated with VCs, or is it oversaturated with projects? What's your take on?
I don't know. Oversaturated with VCs. I don't really have a good sense for that. I'm not a VC. Silicon Valley, I don't know what they do. A lot of them invested in FTX, but I don't know what that means, really. We all make mistakes. So it's hard for me to even make a comment on that. Are there too many projects? Yeah, there are probably too many projects. I get at least, a handful of emails every single day from people with different projects and ideas. Most of them, 98% of them or whatever, will fail. But I'm not a guy who wants to stifle creativity or innovation. And you know what? Let them go at it, right? And the best ideas will come to the surface eventually. And, whatever it is. And the VC's job is to bet on those very early stage concepts. That's not something I really know much about. But, I don't see why we would have a negative opinion about it. It's just, it's just normal. Yeah.
I can speak for. Oh, please, Elise, you can.
Go ahead, Sheikh.
Okay, thank you. Speaking on behalf of Asia Pacific, a lot of VCs or principal capital has been wiped out from providing capital to market makers. A lot of these market makers had money on exchanges, they were creating liquidity, and they were lending amongst themselves. And a lot of their capital has been erased from the Luna contagion. We've seen Free Arrows Capital, we've seen BlockFi, we've seen a lot of this vast capital raised out of APAC. But in the last month or so, I've seen news that there's a lot of traditional investment funds are now coming back into crypto. For instance, Man Group, they made an announcement several weeks ago that they were setting up a fund to invest into the ecosystem. In respect to projects, I guess when the good times are good and it's a bull market, we do see a lot of tokens being launched. But firsthand, I can say for Q1 we're seeing at least 4 new layer ones launch, and with any new layer one, there's going to be a new ecosystem. There's going to be new projects. There's going to be new dApps. There's going to be new utilities. So I expect to see a lot of new projects launch Q1, Q2, and throughout the year. And it would be interesting to see what capital invests into those projects.
Elise, do you have any thoughts on this?
Yes, so we also love innovation and experimentation, and don't want to see that stifled anywhere. A quick caveat to that is that the challenge is, sort of around the confusion that's created, and that, in terms of marketing messages or the way you promote the launch of a new layer one. I can't even imagine, with so many layer ones out there, how people are justifying the launch of new layer ones. But I bet you that they're somehow better than Bitcoin. And the reason why I can bet you that is because we spent 10 years seeing, thousands of layer ones launch that are better than Bitcoin. But setting that aside, I don't know much about the crypto VC space. I have a general understanding of how people make money. I think it's different from venture capital. So here's how we think about venture capital. We think about venture capital as partnering with the company. Early stage venture capital is partnering with an early stage company over the long term, where that company's intention is to build a product, technology, value proposition that will sustain over the decades. So we're looking to get in early when the enterprise value of a company is low, and to help that company build something that's meaningful for its user base, and that will then affect the accrual of enterprise value. And then when we sell to sophisticated investors. What we're seeing on the venture capital side from a Bitcoin perspective is not much different from the general tech VC space. So there's a lot of activity in the early stages. Pre-seed deals, seed deals, Series A deals are still getting done. Because more venture capital has come into the Bitcoin specific space, there's actually not even been a discounting of company valuations at those early stages. That's been flat, or if anything has gone up over the past several years. Now at the Series B stage or later, very similar to what's happening in the broader tech market, there's a dearth of active venture capital participants right now. So there's more companies that need capital than venture capital firms that intend to invest. That's what the market looks like right now in the Bitcoin private company landscape.
Okay, yeah. Also, I'm curious about, like, maybe this is like a fire round, short round. How big is your portfolio? Yeah, and approximately how many companies do you have in it for each of you?
I'll go. So Chiron, we currently have around 10 portfolio companies. All are private, and I would say all very different sectors, different undertakings. But net asset value, several $1 billion and growing.
I can go.
Yeah.
We're the smallest of the group, but our portfolio is comprised of 12 companies right now, one not public yet, but that we hope to be announced next week out of Africa. And the companies that we've mentioned from our portfolio in today's conversation include IBEX, as I've already said, and Lightning Labs. And also, I'll mention Hoseki by name, which is a proof of reserves, proof of assets company. Stillmark is on its first fund and also has an active SPV practice.
Yeah, so we're 1.2 billion AUM between co-invest and the 3 funds. And it's we've invested in 20 companies. It's almost completely invested. The 3rd fund has maybe another sort of 40% to go. We're seeing many distressed sellers. Elise mentioned there's no capital in B and later rounds. I will confirm that. We're not seeing anybody who can, write a $30-40 million check right now. And so we're in a great position. I mean, some funds that are in trouble are selling things to us at 90% discount to the previous round, just because they need liquidity. So, it's a pretty good time for us. And some of our existing companies, some have had drops in revenue from last year, of course, but we've also have companies remarkably who are making more money this year than last year. And it might be the case now that Ledger would be, will do that. We don't know just yet. We have a company, Deribit, that is making more EBITDA, not than last year, but just still churning. I mean, they have 94% of the total options market in the world in Bitcoin and Ethereum. Dominant company. Credo is another company that does decentralized custody that's doing well. Figure is making more money this year than last year. We have also companies like Animoca that, again, will make multiples this year versus what they made last year, even if you are characterizing their revenue in a very conservative way. There's an API and node infrastructure business that it just had a record quarter. So the exchanges are down 30 to 40%, but there are lots of other businesses that are doing okay. So our portfolio has actually held up relatively well. And that's why it's, again, not a venture portfolio. Some of our companies have between 2 to 4 years of cash on the balance sheet. So, we're not, I don't want to say they're impervious to the cycle, but they certainly are insulated from all the volatility. Again, we may not end up making as much as a venture guy who is comfortable sitting with the massive volatility. I mean, net, but I think there's still tremendous returns, with these sort of mid-stage companies.
That's it. So what would you tell now to our listeners? I mean, how should they take maybe advantage now of the current market situation? What's a simple way to profit from that?
Well, I would just say that if you have no exposure in the space and you're a retail-oriented person, you're not a professional investor, I think you have to own some Bitcoin and some Ethereum. I think you can decide how much, whether it's 70-30 or 30-70 or 50-50. I don't know, but I think that buying a little bit, let's say every month for the next 6 months, I think is probably a pretty good idea. And other people have other views about that, and then get comfortable with understanding, those two things. I know Elise is going to say drop the Ethereum, but I think that there's
I'm just curious.
Worthwhile.
I have a question. Something I noticed different.
Yeah.
Something I noticed different about this bear market that I'm curious about is that in historical bear markets, people say the thing to do is to buy Bitcoin. And Dan, in this bear market, I've been hearing people say Bitcoin and Ethereum, which is Bitcoin and ETH, which is interesting to me because of recent events in Ethereum. So I'm just wondering what's changed.
Well, I don't think
to get people
changed.
to this state that they'd recommend both.
Yeah, this was my recommendation in the middle of 19. It's my recommendation to every single person who asks me what they should do, how they should start. And look, they should be doing their own work, right? Do some of your own work. And if you think it's 90-10 Bitcoin, Ethereum, that's great too. If it's 99-1, that's great too. And if it's 90-10 the other way, that's fine. I think that those are two things, they have achieved network effect. They're real. They're not going away. You can have a different view about that, but I think that, there's a big enough community. There are enough developers. There's enough of a community. I understand the difference between the fixed and not fixed, but there's also debate about that. And we don't need to get into all that. I think people need to make decisions for themselves. And so I suggest, look, dip your toe in this way. And if you end up feeling that Ethereum is not good and you're 80 Bitcoin, 20 Ethereum, then you can always sell it. But to buy it as a portfolio manager over the years, you don't really do as much work on something unless you personally own it, right? So don't go in 100% Bitcoin and assume the whole world that there's nothing else, because that closes you off to a lot of possibilities and to learning more about what is going on. If you then make the judgment that, Ethereum is nothing and is going to zero, then fine, sell it. But I think you start with those two. And, and I've said this from the beginning, I don't like the idea of rejecting wholesale a whole, concept that, maybe in 2018 it had improved itself. I think by 19 it had. And I actually think it's possible that ETH leads this next bull run. Again, the future is not what the past is. And so I'm not saying that Bitcoin isn't the highest form of collateral. I'm not saying it isn't, have the best security and all of this other stuff. But I'm also saying that I think this world, the TAM, total addressable market, of what I would call the digitization of value is so big that it doesn't just have to be one thing. It's hundreds, potentially, of trillions. Why does every piece of real estate value need to be specifically on the Bitcoin network? Come on, let's just not be greedy about this. It's just like, to me, it's like, I get it. Trust me, I really understand the primacy of Bitcoin, but I'm also not willing to reject every single other thing that's in the space. I'm also not willing to make specific bets on who will be the winner of those other entities, except I think Ethereum has crossed the threshold. So this has always been my view. Why people are, suggesting otherwise now, I don't really know. I mean, my guess is because the amount of ETH that's actually used in transactions, let's say to purchase NFTs as an example, has exploded. And so if you look at the amount of data, and I have a chart on this, I think the amount of data that is held in the Ethereum blockchain has just now passed the amount of data that is held in the Bitcoin blockchain, even though Ethereum is 7 years younger. But so what? Like, that doesn't mean anything. Like, it just, okay, so there's more, transactions of, XYZ that are happening on that network. Again,
just for the
network effect. Yeah.
My comment is for the new users out there. Once you have some Ethereum, the options all start opening up, and you can venture down that rabbit hole, get into DeFi, start doing microtransactions within games, and it's just learning and playing around within that huge ecosystem that's growing, and that will be a stepping stone into other layer ones. So that's my advice.
I think that we saw for a couple years there, more people that started out in the Bitcoin camp they started moving towards Ethereum, like Peter McCormack and Lynn Alden. They said, well, actually, okay, you can't have stable coins on Ethereum, and we actually care about the world's poor, and we want we want inclusiveness for banking and financial services. And so some people started, Nick Carter's now in the Ethereum camp.
Wait, but sorry, just to interject there's a couple things that have been said that are just factually not true. And especially around Lynn and Peter McCormack. So I just want to make sure I heard that right. You know that they are not people that promote Ethereum, right?
Well, they're not people that promote Ethereum.
Because that's not true.
Lynn Alden and Peter McCormack have publicly on Peter McCormack's What Bitcoin Did, they've talked about how they see that stable coins are being used by some of the people they care about.
That's very different from Ethereum, though.
Well,
so Lynn is someone. Okay.
In the actual,
right. I'll pause here, but I think this underscores the importance of everyone doing their own research, because it's not fun to note that things are being said that are not true. But there's a few things that have been said here that are just factually inaccurate. And I mentioned the one about Lynn Alden because I don't think it's fair to attach someone's name to a dishonest statement. So I want to call that out. But she's written extensively about the difference between Bitcoin and Ethereum and the importance of a network effect and what that means for Ethereum and for Bitcoin. And so I wanted to call that out, and I think her writing is great. So when someone mentions a person and associates that person with a factual statement, a great thing to do is to go and find that person's work yourself and to read it. But everything that's been said here, including on a metrics perspective, what people are saying or writing, are all things that if people are curious, they can go research themselves and see what sort of activity is happening on each of these chains, in what volume, and sort of, where people land. We love innovation. I've been in venture capital for 10 years. We just want people to, and I don't care at all what people buy. I care what you sell. So what you're buying, what you're holding, I don't care at all. There's no judgment. But I care what people sell and how they sell it. And especially because retail are involved, and because people that don't have the same time and resources we do to understand these technologies are sort of just hearing these memes or marketing pitches. And I think that can get a little dangerous. And so I think what I would say, I think the initial question was, what do people recommend? And I would say what I recommend is the same as in every time I'm asked this question, which is for people to do their own research. Think about what they see broken in the current system if they do, and then to start to learn how some of these technologies, including Bitcoin and Lightning, can address that. Don't take my word for it and go to the primary source, which are resources like Lightning Labs' own blog, the Bitcoin white paper, or the original cypherpunk chat forums.
Thank you for that. I don't want to argue with you at all, but what I was trying to say is that they came from a very strong position in the Bitcoin camp. I'm big fans of Lynn and Peter, but it was about a month ago, and I'll try to send that out somehow on my Twitter so people can find my Twitter that links to this podcast. But in that podcast, they discuss how certain people in developing countries that want to have access to stable value and their local currencies aren't stable, they do see how Ethereum is being used for that purpose, to basically allow stable coins. But what I wanted to say was, even though we saw that kind of like some really, Nick Carter and other people going towards the more towards the Ethereum route, like over the last couple years, I think this whole recent collapse of FTX and Celsius, that kind of drove people now back more into the Bitcoin camp. So I think there was like a little bit of a reversal there. And recently I was speaking to someone that used to call themselves a crypto expert, and now they're a Bitcoin expert. And so I think that we're seeing a little bit of a transition away back to Bitcoin only. But yeah, I also encourage everyone to read Lynn's work directly. I'm a huge fan of her writing. So I don't want to say that she's in the Ethereum camp at all. I just want to say she started out as very strong Bitcoin, And you know, we also saw that with other people, you know, Raoul Paul and other people that started out, you know, more strong for Bitcoin and then kind of broadened into Ethereum. One thing that I always wonder is, you know, one of Bitcoin's main benefits is that it's decentralized. But if the whole world was on Bitcoin, would it really be anti-fragile anymore? I mean, I think we would have the most centralized monetary system in the whole world.
Again, it's also theoretical. And you know what? I don't know what business everyone is in that is focused on, but you know, there's a difference between, to me at least, philosophy and then business and returns. So I've been very focused on returns my whole life. Business is business. Philosophical discussions and, you know, what is optimal and what might happen, even in what you've mentioned, you know, what would happen if the whole world was on Bitcoin. I think it's, you know, those are all interesting things to discuss. But I'm not sure that I connect them with the process of making returns. And with that, I have to jump, everybody. I'm sorry. Please continue on, but I have a call that I have to prepare for in 8 minutes. I'm sorry.
I'm going to jump too.
Okay.
Thank you.
Thank you, everybody.
Likewise.
Thank you very much. I think we had a very lively and interesting discussion, and thank you all that you joined us and that you shared your thoughts.
Thank you, guys.
Thank you very much, Jake. Thank you very much, everyone. Thank you to our audience. Thank you very much, Demelza. And we are looking forward to bring you some new content again in a few weeks or a few months. For sure, we see there is lots of stuff to discuss. And
absolutely. Let's see what December brings in terms of events.
Definitely.
But we'll be in touch, guys. Thank you for having me.
Thank you. Thanks for joining.